Good morning. Investors getting very speculative once again, of course, as markets continue to rise here. It's not surprising that more and more investors getting drugged back into the market. After that terrible 5% drawdown that we had back in September, all of a sudden people have completely forgotten about that disaster, and we're back to pushing markets as high as possible. Currently, markets back to over 2 standard deviations above 50-day moving average. Again, all that suggests is that markets are just very overbought here short term as investors continue to kind of push stock prices higher. And we're seeing that importantly in some of the most speculative areas of the markets, in particular. Avis Car Rental, of course, announced very, very good earnings. That stock up over 100% as investors chasing into that stock, forcing shorts to cover. That increased the stock price dramatically. Now, the stock was already up over 100% for the year to start with, and now has dramatically increased that price because of the action yesterday. We'll see if that follows through. This morning, Bed Bath & Beyond is also going to be up about 100% this morning at the open as well. Same reason they announced good earnings yesterday, better than expected. Also an announcement with Kroger's to begin selling some product with Kroger's on their website. That stock has been under a lot of pressure here lately, but that stock this morning, because of the option covering as well as the short covering that's going on there, that stock is going to be up sharply this morning as well. Again, this is just kind of back to that meme stock mentality that we've seen previously in the markets. Again, lots of IPOs coming to markets here recently, lots of activity in terms of buybacks. That was another big driver of Avis yesterday as well, talking about buybacks of their stock. Again, buybacks are running over $1 trillion this year so far. That's been a big driver of the underlying support of the market, along with retail speculative trading. Options put call ratios are back down to lows, also showing another sign of speculation in the markets. We see that speculation going on in the S&P 500, but the participation continues to be very weak here. As we've talked about here recently, during this entire rally of the market, volume has basically evaporated at this point, not showing a lot of commitment here by traders to the rally. And again, our money flow indicator is now back to a very, very elevated level, very close to turning over here, as well as the MACD has now started to tighten up as well. So again, when the MACD and the money flow indicators do line up, that is typically signaled areas of correction for the market. So again, something that we want to pay attention to in particular here over the next couple of weeks. Now, what triggers that correction? Who knows? But simply the markets run very far, very fast. It's very extended. And we're about to run into mutual fund distribution cycles here for the next couple of weeks. So I could certainly put some pressure on stocks near term. But that would be actually good news, because a correction here, say back to the 50-day moving average, would set up the markets for that traditional end of the year Santa Claus rally. So again, no reason to get overly concerned about the markets here. But again, this is probably a good idea, and why we were taking profits yesterday in some of our more overbought positions in our portfolio. That's all in our daily commentary today as well. If you go by the website, realinvestmentadvice.com, click on our daily commentary link. We go through the changes we made in our portfolio yesterday to keep you up to date. Again, that's realinvestmentadvice.com. See you back here tomorrow.